The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Here's the Futures Hour, and I'm going to start out today with the stock market because we are at the spot that we've been looking at for the past 10, 12 days, I guess. We've come up and we've completed the big AB equals CD pattern in the Dow Jones Industrial Average that completed at 13,295, something like that. And we backed off a tiny bit since that point. We've also completed the AB equals CD leg and the E-mini S&P, and we've also completed several different patterns in the AB CD Gartley format in the E-mini. So this is an ideal place if you're interested in going short the market because we're trading around 1373 right now. Our high's been around 1376. The 786 retracement on this last move is 1379, and we have a very interesting, pattern that is actually occurring in the. I lose my train of thought. When in the E-mini S&P, we have one on the daily, but if we look at the cash market on the hourly chart, you'll see that it has formed a three-drive pattern from about a month ago. Back in June, on the 19th, we had a new moon, and then we came down. Then we went up into the full moon of July the 3rd. That was the second top. And we came down, and then we're going up into the new moon today, which could be the third top. So symmetrically, it's set up really nice. The risk-reward ratio here is very good in my opinion, but you really need the market to close below the 1367 today. That was the low. So if it closes below that, then we would assume that this is what we're looking to do. So I don't believe this is the final top. I believe we're setting up for probably one of the best sell signals 10 days from today, trading days, when we reach August the 3rd. That's the main thing that I'm looking for at that time, and I really think we have the best possibility of doing that. The Dow Jones Industrials, I posted that into the Tiger TV, and it does not have the same three-drive pattern that we have in the S&P, at least not yet, because we haven't taken out the highs from the July 3rd. Full moon. So we'll have to wait and see if it can still do that. If you're safe, you could wait till the end of the day and see if we close below or get down to that 1367 one more time. But right now it looks like we do have a chance for it to make that level. All we've done now is we've come down. We dropped a quick 10 points and we rallied back to the 786. That's all we've done. So there's no damage has been done or anything, but I really believe that this is a shorter-term trade, because I think, and this is again here's my opinion because of what we're looking at for August, between the 28th of July and August the 3rd are the dates that I'm looking at, that when the Bradley model starts to kick in, and then we have the another full moon on August the 3rd, so that'll be a very interesting one. But the lunar cycle's been working, relatively well here over the last 5 segments of it. So we continue to think that it will work, and then when it stops working, we'll wait till it comes back in vogue again, and that's what we're looking at. Oh, I really messed up, Al. I think I got knocked out of the den. Oh, Larry, just a second. Al, are you there? Oh, shucks. I'm not even capable of walking and chewing gum at the same time anymore. I'm sorry, folks, but I made a technical error. I'm trying to switch chart to chart. What I did was I hit the wrong button, and when I hit the wrong button, that causes me to disconnect from my my TFNN room where I can actually see what's going on. And so what I have to do is to try to log back in, and I'm bluffing here a little bit as I try to get the den back up, and then I'll see if I'm able to do it. And right now I'm not able to, so I'm just going to have to talk for the next 7 or 8 minutes, and we'll get ready to talk about the commodity markets, because we have some monsters going on here in the grain markets, as you know. In fact, this is history, folks. You really ought to pay attention here, not just to me, but the other things that you read about on the net and other places, because this is something that has not happened since 1974. The swings that we're having in these markets are fantastic. In fact, I'm really surprised that they're not a lot higher than they are. I mean, we've got new highs in soybeans above $17 a bushel. We have wheat is trading at near $10 a bushel. And remember, wheat hit $23 a bushel in Kansas City wheat back in 2008 when we had a very bad drought, and it was nothing like we had here. And then after that occurred, of course, the crop turned out to be really good, and the price of wheat dropped 75%. And we have a similar situation now, but the news is so heavy with these things that it's making them realize that the crop is really bad, but more and more people are not actually coming into the market. I mean, we're having drops in open interest during this time, and that's highly unusual, because that means it's short covering. And so I believe that the small speculator is not in the market at this time. And so what I'm expecting is that when this market does finally turn over, it's going to be, really, really disastrous, what I think it will be on the downside. So whether that occurs that way or not, we'll have to, give it a little bit of time to see if it's going to, actually, make that point. But when I finally do get charts, I'm going to put them into the into the Tiger TV, so you'll be able to see them. I've prepared everything from wheat and also corn, of course, and soybeans, and I've already put the rice chart in there to give you an idea. Then I want to go through and give you an idea of how you come up with the higher prices for cattle and hogs that we're definitely going to have, sometime in the fall. That's for sure what we're going to, be looking at. So anyway, this is, unfortunately, like I say, I made a technical error here, and I have disconnected myself from the den, and I'm trying to do it as we speak. Unfortunately, the problem arises is that it's not working like it usually does, so that means I'll probably have to reboot after we come up with a break. And if there's any questions, I'll answer them at that time. I did want to mention a little bit more about the problem, with the commodity, NFA and the CFTC, because there's a lot of, talk on the internet about, what's happened with PFG Best. Now, PFG Best, Peregrine Financial, was a very small company. They only had 1,900 customers. Their business had not been expanding, and we know why now. But it did hurt a lot of people. And so what's happening now is we have to see if the CFTC is going to launch an investigation like they should have with MF Global, which we've not seen anything come across with MF Global. They took $1.2 billion. There's no question about that. That money, few people have got a few $1,000s back on the smaller accounts, but they basically robbed the bank at $1.2 billion with John Corzine at the helm. He lied right in front of Congress. There's no question that he did that, because the bankruptcy thing is proving that. But nothing has happened yet. Whether the actual thing will occur later, we'll have to wait and see. But we're just looking. You have to be really careful, folks. I know I'm on a soapbox when I talk about this, but the problem is that you have to have, when you're trading commodities, you have to have a clearing member as your first line of defense. It's best to have a listed stock. Also, that's another good way to do it. One of the firms people ask me about all the time. I don't use this. Sarah, my wife, uses it in one of her accounts, but it's Interactive Brokers. They're very good. And the reason why I say that is that they have a very, very wide and diverse clientele. They're incredibly hard with margins. I mean, when you get a margin call in there, I've had experience on some legal matters with them acting as an expert witness on their behalf. And believe me, when they have a margin call, they let you know right away. And it's not a question they're going to carry you for 1 or 2 or 3 or 4 or 5 days. That's not the case. When I first started trading commodities back in, it was back in 1959. No, 1960 was my first commodity trade. The CFTC didn't come into business until 1975. Until that time, all margin calls were handled among the clearing members themselves, and you could trade in the debit balance if you wanted to. If your clearing member would cover you, you could be on margin call for 10 days. I know this because during 1974, when that happened, when I lost my first big hit, that's what happened to me. And they allowed me to trade out of the debit because I had traded, so well over a few years, and I had a bad period, and my debit was very small. But after that, I didn't trade for well over 14 months as I studied the markets, and that's when I really got heavily involved with the Gartley pattern, and so that's why you got to be really careful with who you're doing business with. If your firm is a listed stock and it's going down and it looks like it's really bad, take your money out of there, folks. It's just not worth it. It's just not fair to yourself and to your family, because what's happened in the last since December when MF Global did their thing, and then we have another one coming up on July 3rd with PFG Best. I mean, that's twice, and I never thought I'd ever see it once in my lifetime, because I always thought the Merc was the place of last resort, the CME, but that is not the case anymore. They are not standing behind the people, and that's what makes the big difference of what we're looking at. So I'm hoping to get back on here one of these days. I'm going to have to try to reboot here and come back, so we'll see you after the break. Oh, brother, I just can't.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Here, and I'll see if I can. Okay, boys and girls, this is the intellectually challenged Larry Pesavento trying to get into the chat room. And believe me, it's no easy matter when you don't do too much with these things. So if you will bear with me a second, I'm going to try to get in here. And my problem is with Firefox. It's not allowing me, connect to my my usual thing that I have for allowing me to, here I'm trying to do two things at once. Just bear with me, folks. It's hard enough to do the show without messing it up like I'm doing now. And I guess you have to give me one bad mark. Well, you give me more than one bad mark a month. But we'll see if this doesn't work. I'm going to pull my hair out. And I haven't got a lot of hair to pull out anymore. So we'll see if this is going to be the case. Okay, let's see if this works. I think I'm back in, so I think that's okay. Yeah, I'm back in the den. I'll try not to mess everything up now. I'm going to move my cursor over, and I'll be able to start being able to do the charts that I prepared. And I spent a lot of time doing this darn thing, so I want to get this thing right so that we're able to do it. So all I need to do now is to get the charts ready, which will only take me a second, because we've already done 5 or 6, but we really need to get into the commodities because, we've had some tremendous moves here in these grains, and we really probably, should start out with our largest crop that we have. I'm going to test here to make sure that we are getting charts. I'm going to put the Dow Jones in, and the Dow Jones just broke above the highs of July 3rd. That probably means that we're getting higher in the S&P, and so we still haven't taken out the 1376, but we're very close. We're completing that third drive now in the S&P, and we're also completing it in the cash, and we're completing it in the Dow Jones, and this is the new moon date is what we're supposed to be looking for. Now, we need to get to where we are in the corn market here, because this is a very, very important market that we've had going straight up now since June, when we had Rich Anderson on, and we were talking about the Gartley pattern that was forming there, and the fact that we were looking at the market going straight up. I know someone asked me if I thought that corn was topping soon. Folks, if you take a look at this chart, it has gone up 1, 2, 3, 4, 5, 6 weeks in a row in the midst of this drought. It's left one nice little gap last week, and if we get below 750 in the corn, in other words, for it to drop about 30 cents, then I would say yes, there's a probability of the market to move down. But until that happens, I don't think that is a good place to try to find a top. Now, the corn market is a wonderful market for trading purposes, folks. I think that on yesterday's show, yes, it was yesterday, I posted a chart on corn, just showing you the intraday moves that were occurring during the time when overnight trading and everything else that was happening in the corn market, and it really gives you a pretty good idea of how symmetrical the corn market is. And I think it's worthy of putting this chart up again, because we have it's doing the same thing again. From this chart that you're looking at now, which is a 5-minute December corn chart, you can see the two large AB equals CD patterns that formed over a 2-day period, and it stopped exactly at the target price of 756. And since that time, we've gone up and we've made a 1.27. Right about the $8 per bushel level. So it shows you that you don't have to risk an arm and a leg when you're trading the corn, because of the fact that it it trades so beautifully, and with this overnight trading that we have now, it really makes it so much better for trading. I mean, it's far better than whenever I traded on the floor. It's amazing. By the way, someone mentioned about an ear of corn, and we were in the market the other day, and it was 50 cents for an ear of corn. Folks, I can remember when corn was, you could buy 10 ears of corn for 50 cents. That was back when I was in high school, of course, when I was in school with Moses. But at that time, it certainly was, a spot to take a look at it. Now, we'll talk about soybeans next, because wheat next, because we've had a huge move in the wheat market also. It's basically straight up. And we get back from the break, we'll talk about wheat, and I'll show you the difference between what's happening now and what happened in 2008. I think it's important, a technical point of view, and what's happening with the weather that this has done.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, this is Larry Pesavento, 877-927-6648. I think we have a caller on the line. Am I correct?
Yes, sir.
And your name, sir?
Dan. I'm in New Jersey.
Dan, what can I do for you, my friend?
Mr. Pesavento, I was looking at, well, when I called, it was a little bit earlier on, and the IWM was flat, and the NASDAQ was up 1%, and I was just interested about the divergence and see what your take on that might be.
Okay, Dan, what I can do is I can pull up the IWM. I don't trade that. I never have. Basically, I basically trade the NYSE, the Dow Jones, and the S&P, but I can certainly look at this, and I can just tell you right now, before I've even refreshed the chart, that we've actually, we're far lower in this one than we are the other. We're just bare. Oh my goodness, this thing is really. Well, actually, it's not too bad. It's doing. It's behind a little bit, but not too much. Let me break it down to an hourly chart for you. I think it's easier to see if we can do that. But here again, when you see it on the hourly, it's far behind. I can see why you're concerned. Give me 1 second. I'm going to put the pattern that I see occurring, because all it's doing now is it's just making a 786 retracement where the rest of the indices are already taken out the highs from the third. Let me mark this IWM so the people in the Tiger TV can see it when it comes up, and put the hourly on it. And I got a little bit under a little bit of too much pressure today when I lost my my conductivity. to the den. Okay, I'm ready to put it in now, and you'll take a look at it. You'll see that if you want to short something, this would be the one to sell. And the reason why it's far weaker than all the others, and you're supposed to sell the weakest in a bear market and buy the strongest in a bull market. So the IWM would be the one that you'd be able to sell here. You see, it has not even taken out the highs of yesterday, and I think that in itself is a bad sign. So my guess is that that'd be the one to sell. And this is the new moon day, and so that's what I would be looking to doing. If you're in the long, I would certainly tighten up your stop on this, because it could turn at any moment just because of that lunar cycle that's been holding up relatively well.
No, I went short.
Okay, then I think you're okay. As long as as long as the S&P does not close above, watch that as your guideline, because if it closes above 1382, then I would say, well, it could go up another day, because you could be off a day in the timing. But if you allow yourself enough risk with IWM, I think you should be okay, because it's acting very, very weak. And if you want to take the same analogy, remember how on this show we've always talked about gold and silver, and how gold is the best thing to buy because silver is so weak it can't get out of its own way. Well, this is the same relationship that we're having right now.
And I've got your book too, and I recall the harmonics. It looks like, and I believe that's the right terminology, but it looks like it's got a 7-day cycle where, about a 7-day cycle, and then it'll reverse on the IWM.
That's correct. Well, that's part of the lunar cycle. See, because the lunar cycle is 28 days. You cut it in half, it's 14. You cut it in half again, and it's 7. And that's how you come up with these. And if you cut it again, it's 3.5 days. And if you went back and looked at hourly charts on it, you'll see that it probably has a 3.5 day cycle, that extends out to 7 days, 14 days, and then out to 28 days. And it's certainly been following the lunar cycle, for this is the 4th repetition now, so that's 2 full months.
Mm. Yeah, all right. Looks good. Well, sir, I really
hope that helps.
Insight. No, it does. Thank you very much.
Okay, thanks for calling in, my friend.
Take care.
You bet.
Bye-bye.
Bye. I have not, watched the IWM. I follow it occasionally when someone asks me to, because it's the small cap index. But we have another call from Larry in Las Vegas. Are you there? Well,
yes.
I'll never be able to forget your name, Larry. I can promise that.
Hey, we should start a club.
Yeah. What can I do for you?
I got a question for you on trading volume and how it's going to affect small retail traders.
Mm-hmm.
I'm just kind of comparing things now to what happened during the Depression. When you had traders, retail traders that were making their living trading, and stuff like this occurs where the economy just takes a nosedive, I'm just thinking that it drives a lot of the traders out of the market. I mean, you can correct me if I'm wrong, but spreads would increase on our currencies. I would see margins really increasing on the futures, and people just dropping out of the market, making it really hard for people that were successful making their living trading. And with these new conditions, would this happen, or what would happen?
I will tell you this. Fortunately, I wasn't born until 1940, so I don't really. I was, out of the Depression years. I was just a little kid, a small baby, and then I remember the stories, from my parents. But when I started to study these markets, I went back as far as I could get recorded history to make sure that these patterns would work, and I went back through. After the Civil War, 1876 is when we first really started getting good data. There were 2 depressions during that time. There was one in the late 1800s. There was one in 1929, and we haven't had one since. And we're due for one. And I think I think the Fed has already just about told us that it's coming. The question is when. But as far as the trading volumes, actually, the actual opposite occurred of what you were just talking about.
Is that right?
The liquidity dried up a little bit, but the commissions were reduced a little bit. But remember, we didn't have back in there's a book. Oh boy, I can't remember the name of it. I only paid 10 cents for it at a bookstore one day, and it's one of the most valuable books that I have. It describes everything that occurred during the Roaring 20s and afterwards. And basically what happened, and people don't realize this, but 16 of the Dow stocks went bankrupt during the Depression.
That was a lot.
And, yeah, only yesterday. God bless Kip. He remembers everything. He's got a mind like a steel trap. The name of his book is called Only Yesterday. I don't know if you can ever find it at a used bookstore, but it really describes everything. And the things that you talk about, I don't think you have to worry about them because of what we have now with electronic trading. Remember, back in those days, they had chalkboards where they actually chalked everything up, and then in the late 30s, Bunko Ramo came out with many of the these boards, and Reuters also came out with quote systems, and then they had ticker tapes. I used to have a ticker tape from the Board of Trade and the Merc where I was getting my my quotes for cattle and soybeans and corn, right off of a ticker tape. So I don't think that'll be a problem if we do go through this. And and if we do go through it, and I think we will. And the reason why history tells us that you have to learn from your mistakes. And believe me, I spoiled my kids rotten, but I got two great kids. They were worth being spoiled. They've never had to worry about anything. They never had to worry about where they wanted to go to school or whatever they wanted to go for a vacation or whatever. They never had to worry about that. And I think that the next generation coming, and that we're talking about a generation of 80 years. Yeah. And if you add 80 to 1929, you're right there. Maybe what we saw in 2009 was the last depression. I don't know. I don't think that's it. But
so you think small traders such as myself will still be able to stay in the market?
Oh yes, absolutely.
They'll make a living.
Yeah.
They won't be driven out. Okay. So a guy with say $50,000 in his account, and he's trading it. He's not going to get to the point where he won't be able to trade anymore, even though he has, enough money in his account. And
as near as I can tell, unless, and this is the big caveat. If there is a big conspiracy out there with LIBOR and J.P. Morgan and a large cover-up of things that we don't know about, and it brings down the whole banking system, then for a couple of years, there might be a time where, trading is not going to be good. It might be just cash trading or something like that. But trading has to go on because this is how our economy is based.
Oh, yes, yes.
You know what I mean?
Oh, yeah, I agree with that. I'm just going back the last 5 years, all the things that this government has done to make it really tough for us to trade. I mean, the fact that we can't have access to a lot of foreign brokers for trading Forex is just,
Yes, that's true. Up until in 1972, when Forex really became popular here in the United States, and that was because of Nixon taking us off the gold standard. You had to have $1 million account.
Yes.
And that $1 million in 1972 was, like 30 or 40 million now.
It was almost real money.
Yeah, it was a lot of money, and there were people that I knew that were actually doing that kind of business. But the swings that we had were really not very much until they took us off the gold standard, and that's when the Deutschmark went ballistic, and everybody thought that the Mercedes-Benz was the greatest car in the world because it never went down in price. Well, it was because the Deutschmark was going straight up.
Yeah.
That's nothing. Well, Mercedes is a nice car, but it was going up because the Deutschmark was going straight up, not because of anything else. You know what I mean?
I want to ask you one other thing.
Sure.
I'm a recent convert. I switched my trading over from lagging indicators, the typical stochastics and ADX and moving averages to harmonic patterns, which I'm very happy with. And I listen to your show when I can, and I hear you talk about the lunar cycles, and I'm very interested in learning this. Do you have a body of work that I can read and study, or?
Actually, the best stuff, I have a book called, Astro Cycles, The Trader's Viewpoint, but unfortunately it's published by Traders Press, who just went bankrupt under PFG. You might be able to, I'm sure you can find it at Amazon. It's not very expensive anymore, but that has a lot of the lunar things in it. But frankly, Larry, if you just Google, if you go in and Google lunar cycles, you'll find a lot of stuff there. And also make sure you Google RBS lunar cycle, the Royal Bank of Scotland lunar cycle. That's the work by Tom Pelk, and that really goes back to 1928. That shows buying on the new moon and selling on the full moon is the way to go. And I'm doing a lot of extra research along that lines right now. That it really is promising. My goodness, it puts the odds very heavily in your favor. So I would get the free stuff first, and then you could go and get the book at probably on Amazon would be my guess, or maybe even eBay. I don't know.
So
I don't have any copies myself, or I'd send you one.
Okay. So Astrocycles is the one.
Title of it, Astrocycles, The Trader's Viewpoint. Yeah, I wrote that book in 1987, I believe, and it was the first book in 25 years that had been written about the commodity markets. Commander David Williams wrote Commodity Cycles, which was in, I believe, 1965. And when he endorsed my book, he was 88. He was living in Scottsdale at the time. He lived to be 98. And, and my book sold very well. And, so it's a good book, So if you find it, fine. If not, you can get a lot of free stuff about the lunar cycle right off of, Google. Just, there'll be probably more there than you want.
And is this actual practical stuff I can take out of the book and use in my trading?
Well, that's the only stuff I can publish, because if I'm very pragmatic about this, is I don't try to do esoteric things that, this looks really interesting from a metaphysical point of view, but I'm not interested in that. Much like that Mayan calendar date, of December 21st, I don't know anything. I know very little about it. I've been to that actual pyramid, and I've watched the sun hit it and watched the 45-degree angles and everything on it, but frankly, I'm not interested in it, and I think we're going to be here long past 2012.
I think so.
Yeah.
So it's not that simple as buying new moons. And
well, it actually is.
It
actually is.
All right.
You can actually do that. You could buy a new moon and sell a new moon, and in fact, I'm going over the statistics now, and it's better than 60%. All I'm doing is using a 1% risk, and I'm looking to make 2%. That's all I'm looking at in the studies that I'm doing for my new book. And I've gone through so many years now. I mean, it's year after year. I haven't had 1 year yet. I've gone through 14 years. I'm going to go through 30 years because that'll be a statistically valid sample. And I've gone through, I believe, 14. And of the 14 years, you're talking about, 14 months. So you've got, 288 cycles or 288 trades. It's really quite amazing. It's just, it's amazing how well it works.
So it doesn't matter if you're trading stock, futures, currencies. Doesn't matter. It's new moon.
Totally different question, my friend.
Okay.
Totally different question. No. This only works with the stock market. Is what it works with. I have not tested it with Forex. It's an interesting thing that you mentioned, but I just don't have the time to test it right now.
Okay. So we're only talking about the stock market.
Yeah, it's mainly the stock market, and I use the S&P 500. You could also use the Dow. That's only 30 stocks, but the S&P 500 is the best. And then, of course, the best one is the New York Stock Exchange Index. But the easier one to trade is the S&P that has more volume.
Great. Hey, thank you for the information.
This is great. I appreciate it. We took a long time here ordinarily, but you asked a lot of good questions, and I hope I answered them for you. And Larry, a lot of this stuff, you can dig it out yourself, and it's even more important that if you do that, because you prove it to yourself, it becomes yours, and you don't have to, worry about it anymore. Just like if you were looking at these lagging indicators, like stochastics and MACDs, once you prove to yourself that you can trade without those and that you can move into what's happening at the present time, then you have the edge that you really need to, to move forward.
Yes, and what a relief it is to break the chains of all those lagging indicators.
Yeah, I used to look at them on color, and they always look nice, but boy, I could never get them to work, that's for sure. Hey, listen, thanks for calling us, my friend, and I hope you roll 7s and 11s today if you go to the casino.
I avoid those. Thank you.
Me too. Okay, folks, we're going to take a little break here. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hey, folks, we're back, and I want to finish up the show here with the Treasury bond market. We've actually backed off from that double top that we made when we were talking about it on Monday. And the notes made new highs in that run there, but the 30-year bond did not. So it has a potential here of still, getting ready to drift off. The question is what's going to be happening with the stock market, because these bonds went up with the stock market pretty much other than the last few days. And so if we have something really dramatic happen on August 3rd that I'm anticipating in the stock market, then we could be looking at something more sinister. Now, I would like to put in a chart that goes back to over 30 years ago, in fact, exactly 30 years ago, that shows the comparative performance between the bond and the stock market. And the bond market has outperformed the stock market by 10 to 1. It's just been, truly amazing. If you'd have put $1,000, into the market, you would have made, around $2,500 over that period, and if you'd have put that money into the bond market, you can see from that chart that it had a tremendous move. This is the cycle that I believe is ending, and we've shown these cycles many times in the past. I'm sure they're all over, the Tiger TV and the place where you can go into archives to look at these, because these charts, I believe, are cycle ending, where interest rates will begin to go higher shortly. And of course, I've been saying that for a few months, and they've continued to stay at these low levels, and they might continue to stay there for a long time. I could be completely wrong on this, and there's a chance that the bonds could go to 160. So we'll have to let history tell us if that's what's going to happen. But right now, it looks like the bonds have at least held that level so far. Now, someone asked a question about the TBT, and we tried that again for another 50 cents a week or so ago, and we went and made new lows, and so you have to wait. I know we made new lows by just a marginal amount, but I still think we have a chance for it to go a little bit lower. Now, if you'll remember that today is a new moon day, and it has a high probability of the market turning, especially when it's moving up 5 or 6 days in a row like we've had now. That puts the outlier event, meaning that the probability of going up 5 days in a row, you have a 75% chance of the market turning down. So all you really need to do is to have the market verify that, is to have it close lower today. Then you would just place your stop above the high of the new moon day, which would be today, and that would verify your risk. Now, when the Dow made new highs today and it jumped up to be up 60, the S&P could not make new highs. And, it's not really gone above that level that we looked at, which is that 1376, which was a level that Tom O'Brien and Steve Rhodes talked about all week long, that it would probably get there. There was a potential that if something really great happened in the market, it might jump up to, 1394, but that certainly has not happened now. So my assumption is that we're getting ready to back off here. This is a Thursday, and we'll when we come in Monday for Monday's show, we'll have a better idea of where we stand. But I really think that you really need to get prepared for what's going to happen August 3rd. We've got 10 days. I'm going to be looking at some option strategies. Hopefully there'll be some that we'll be able to implement that won't be too expensive. The problem with that bond trade, when the bonds were up in that 152, the price on those puts were so exorbitant that it was ridiculous, and they're still high, and so it's really not very not very appropriate to do that unless the premium is very, very small. I would, if you have a chance to go into Tiger TV, study this last chart that I put up on comparative stock and bond performances, because it really gives you a good idea of what's happened over the last 30 years. And I think that this could be turning. And what happens is, we'll see what happens on Monday. May God bless.